Okay, so welcome to another episode. So we're still doing the Matric revision classes. Now, here we are doing the share capital as well as retained income, right? Income and retained earnings is one and the same thing. Now, this is ordinary share capital, right? So we're doing question number 1.2.1. The required says complete the following notes to the statement of financial position, the balance sheet. So the first one is the ordinary share capital. The second one is the retained earnings. So we're doing the notes for the ordinary share capital as well as retained earnings, right? Now we look at the information given. We look at the information given. So I'll just say RI, which stands for retained income, right? Now let's look at the information. So these are two different workings. This one responds to the ordinary share capital and this one responds to the retained earnings. So I'm just saving space. Now, you look at the information given. If you look on the information, you look at the information, you'll see that the balances for 2022 are already given. So which means you need to write your balance 28 Feb 22, right? Same applies here. You'll have your balance 28 Feb 22, right? Then let's write our balances. What are our balances? For ordinary share capital, the balance. Okay, before we proceed, please take note. If they want the ordinary share capital, sometimes they will want it. They will want the amounts. Sometimes they will want the number of shares. So you must be careful. You must look at the question very carefully. If they want the number of shares, they will tell you that they want the number of shares, right? They want the number of shares in issue at the end. Or maybe they say they want the number of shares. They want you to prepare the ordinary share capital note in shares, right? So here we will have both the shares and the amount, right? Now, the balance for the share capital is 7,954,000, and the balance for the retained income is 1,196,000. So remember, I said every time you deal with the question, start with the information that you already have before you go to the adjustments. Start with the information that you already have, because the adjustments, some of them will confuse you. So before they confuse you, if you had the closing for 2021, then we would have balances here, which are opening balances. So it's 1 March 21 balance, 1 March 21. But in this case, they are not given, right? And therefore, we don't know them yet. So we take the closing balances. We've got the balances for 2022, right? Now, let's proceed with the information. So we look at the information. Let's go to the adjustments. The adjustments that talk about the share capital and dividends. Now, on information B, they say it relates to share capital and dividends. Now you've got the date, you've got the details. On 1 March 2021, which is the opening date, they say 75% of the authorized share capital of 1,200,000 ordinary shares were in issue, right? So which means you have the opening number of shares, but you don't know the opening amount, the opening share capital. Now let's do it separately here. So we will say ordinary shares. I'll just write ordinary shares, right? And then we ordinary shares, and then we do the workings, right? So the balance, so we already know the balance is 1 March, right? 2021. Now the balance was, we say it's 1,200,000 times by 75%. How much is it? 1,200,000 times by 75%, then we get 900,000. So which means 900,000 shares were in issue at the beginning of the year, right? Now it continues on the information to say on 30 August 2021, 80,000 shares were repurchased from a retired shareholder. Now please take note, 80,000 shares. We're still dealing with the number of shares. 80,000 were purchased, right? So we will call it repurchase. So it is the company that purchases shares from the shareholder, right? So that's why we will subtract it. So how much will you have? You will have 820,000 as your balance, right? Now we continue with our information. So our information further says, still on 30 August 2021, it says he was paid 20%, which is 136,000, 20% above the average share price, and will no longer qualify for dividends. Now remember, when someone is paid over and above, then it means that it affects the retained earnings. So we say repurchase on retained earnings. We say repurchase. Then they have given us the amount already. It's 136,000. So we are going to subtract that amount because it decreases retained earnings. And remember, on retained earnings, the next item should be net profit. Net profit, and the next item is dividends, right? So on dividends, you will have interim as well as final dividends, right? Interim and final dividends. So when you add them together, they will give you the amount for dividends that you will subtract here, right? Okay, let's continue with the calculation of the number of shares. Now, after the repurchase, on 31 August, an interim dividend of 28 cents was was paid. So you need to take note. You must calculate the interim dividend on 31st August. You need to identify how many shares were there on 21st August. So you'll say 28 cents. This is 0.28 rands. 28 cents is 0.28 rands, right? Now you say times how many shares were there on 31st August. Remember, this is 1 March and this is 30 August. This is 30 August. The dates are very important. You must write your dates, right? This is 30 August, and then on 31st, dividends were issued. It means on 31st on 31st August, you had 2021, you had 820 shares. So it means here you will say times 820 shares, right? So 820 times by 28 cents, it gives us 229,600. So that's your interim dividend, right? Now we're left with the final dividend. So let's continue with our information. Then after 30th August and 31st August, on 1st December, an additional shares were issued, additional 150. So we call it issue. We say issue, or you can just say additional issue. So this is on 1 December 112, right? Now, how many shares? It was 150 shares, right? Then finally, on the information, it says on 28 February 2022, a final dividend was declared. So you still need to know on 28 February, how many shares did we have? 28 Feb, how many shares did you have, right? 2022, we're dealing with 2022. So it means it's a balance because it's a closing date, right? So how many shares you will add 820, you add it to 150, right? So you have sorry, it's 970. So you have 970,000, right? That's your closing, which means your final dividend will be based on the 970. But how much was the final dividend, right? You don't know. Now look at the information carefully, you will know how much was the final dividend. Firstly, look at interim dividend. They say on interim dividend on 31st August 2021, an interim dividend of 28 cents per share was paid, right? It means this one was paid, right? Number 2, on final dividend, it says a final dividend was declared. You see there's a difference. The other one was paid, the other one was declared, which means the interim dividend was declared and paid. The final dividend was only declared and not paid. And therefore, anything that you have as a shareholder for dividends will relate to the final dividend, because the final dividend was not paid. So you go to the information that you have. Information 1. Information 1, you have shareholders for dividends. How much was it for 2022? So it's 213,400, right? It's 213,400 because the final dividend was not paid. So shareholders for dividends represent the final dividend, right? Then you can calculate the total dividends. 229,600 plus 213,400, then you have 443,000 as your total dividends that you will subtract on we will subtract under the retained income, right? Now let's come back to the share capital, right? We've got the retained earnings. Now we are left with the profit and the balance, right? Now let's come back to the ordinary share capital, right? Perhaps let's just finish with the retained income. How much is the net profit? If you remember, on the information given on information C, they talked about the income tax, right? On information C, they say income tax for the year after taking into account all adjustments amounted to 438,000, and they say this is 30% of the net profit, right? This is 30% of the net profit. Now you want the net profit, which means the profit after tax, right? Now you've got 438,000. So you will say times by 70, because the income tax is based on profit before tax, right? So it means when you calculate profit before tax, you will say 438,000 times by 100 over 30, right? You get the amount. This is profit before tax. Then profit after tax is 438 times 70 over 30, right? Or you can calculate profit before tax, then after you subtract the tax, then you will get the same amount, right? So our net profit will be 438,000 times by 70 divided by 30, which gives us 1,022,000. And then we calculate the balance, right? The balance is not given, so we can work it out from the closing balance, and then we take it back. So it means we take the closing balance, we add, and then we add, then we subtract, then we will get the closing balance, right? So we take 1,196,000, we add back 136,000, then we add back 443,000, then we subtract 1,022,000. 1,022,000, then our opening balance will be 753,000. So even if you when you go back, it must give you the same balance here, right? So it means we'll say 753,000 plus net profit. Remember, you take the balance, you say plus profit, you less dividends, and then you less the repurchase, then it will give you the balance. Now let's say plus 1,022,000, 1,022,000, then we say minus 443,000, we minus the dividends, and then we minus the repurchase. So our balance is 1,196,000, and we are done with the retained earnings. Now let's come back to the share capital. Remember, on the share capital, we only got the closing balance and we got the number of shares. We don't have any other information. Now let's continue. So this is our workings. On 1 March, we had 900,000. Then on 30 August, we repurchased 80,000. Then it means our shares reduced by 80,000. Then we were left with 820, let's say, balance. This is the balance on 30 August, right? 2021. Then after we issued on 1 December 2021, we issued 150. Then on 28 February, the balance was 970. So which means this balance, this one, goes with 970 shares. So it means you can work out the share capital. You can work out the share capital. How much was the share capital? So the share price. You can work out the share price. So the share price, we call it average share price. The average share price, we take 7,954,000, and then we divide by 970 shares. So our 7,954,000 divided by 970,000. So our average share price is 8 Rand 20, which means here it's 970 times 8 Rand 20, right? To get that amount. Now, which means when you come here on the opening, you must say 900,000 times by 820, right? That's your opening. Then you have your repurchase. Repurchase, it's 80,000, right? Times by 820, right? Then on the issue, maybe you can have a balance here, just like we did here. After the balance, we have the issue, right? Issue, it was 150,000 shares at 8 Rand 20. And then what else do we have? Okay, then we'll have the balance, right? Now, when we add, they must give us this amount when we add all of them. So we'll take 900,000, which was our opening, times by 820. It gives us 7,380,000. Remember, this is the amounts. These are the amounts, and this is the number of shares, ordinary shares. This is the number of shares, right? The number of shares, right? Now, on the repurchase, we'll say 80,000 times by 820, then we get 656,000. It's a repurchase, and therefore we subtract it. So when you subtract it from 7,280, you will have 6,724,000, right? And then you calculate the reissue, 150,000 times by 820, and then you have 1,230,000. So when you add here, this one was subtracted equals to here. Then when you add this, it must give us that one. So 1,230,000 plus 6,724,000. So it gives us the same amount, the closing balance, and therefore it means we are done with the share capital. Now I want you to take note. Number one, on the ordinary share capital, you can either have ordinary, they can either ask you to prepare this part, which is the shares part, or they ask you to prepare this part, which is the share capital part, the amount part. Now, this is why I separated it. When they want the ordinary shares, you will start with the authorized. So let me just wrap here. You will start with the you will say ordinary shares, right? Ordinary shares as your note. Then you will say authorized. Authorized shares. Remember they said authorized shares is 1,200,000. Okay, let me just wrap here as well. So you will write your authorized shares here, 1,200,000. Then you say issued shares, or you say in issue. So in issue, you'll have your balance, you have your repurchase, you have your additional issue, and then you get your closing balance, right? So this is how you will do it, right? And then that's it. Then on the ordinary share capital, you still have the balance. You multiply by the share, you take the number of shares, you multiply by the share price. You multiply by the share price, you get the opening share capital. If it's already given in the trial balance, which means the opening was the closing for the previous year, you just take it as it is, you put it here. Then repurchase, if there's a repurchase, or additional shares, if there's additional shares. So please minus the repurchase or the buyback. It's a repurchase or buyback. You must minus it. And then any issue, there can be more than one issue. Maybe there was an issue in May, then an issue in August, then an issue in December. So you must, all of them, you must include them here. Even here, you will include them, the number of shares. Then here, you calculate the amounts. So the issue times the average share price, issue times average share price, right? And then you will get your balance. So you take opening, you add all the issues, and then you subtract all the buybacks or the repurchases. Then you've got your balance. So that's it for share capital and retained earnings. So by the way, this is equity. If they wanted equity, then you would just add this one and this one. You add the closing balances, right? Then the equity for the previous year will be the opening balances, right? Now, then it means you are done with the note. Now, let's say they wanted the ledger accounts, right? Now, let me quickly prepare the ledger accounts. So I'm just wrapping this part for ordinary shares. I was not supposed to wrap this one, but it's okay. So this is just the balance, closing balance on 28 Feb 2022. Now, when they want the share capital, you just prepare your T accounts, right? I'm just going to wrap this one as well. This is ordinary share capital account, right? This is a ledger, this is a debit, and this is a credit, right? So it's an equity account, and therefore it means it has got credit balance. So you say 2022 Feb, right? On 20, sorry, it's a balance. It's a balance, and therefore it's 2021. It's an opening balance. It's an opening balance. March, right? 1. And then you've got your balance. You see it's a balance. And then the amount will be that one. You take that one, the opening balance, 380. And then you already have the closing balance, and therefore you also say balance CD. So in 2022 Feb, right, 28, you have your balance. So this is balance CD, and this is balance BD, balance brought down, balance carried down. Then the balance CD will be this one, 7,954,000, which also becomes your then you will have your total here, you will have your total here. So the closing balance becomes the opening balance in the next period. So 2022 March in the next financial period. 1. The balance brought down will become that amount, 7,954,000, right? Then let's fill out the other information. You've got a repurchase, so the repurchase is debited. So you will say 2022 Feb or August, 2021 August, there was a repurchase. So it's 2021 August and the date was the 30th, right? So it's a repurchase. Repurchase for how much? For 656,000, right? And then you've got an additional issue. So you've got your bank here. You've got the bank. And the additional issue was on 1 December. So you say 2021 December 1. So it's bank. Then how much was it? You say bank because the shares were sold and we received money in the bank. So the amount was 1,230,000. Remember, we use the amounts here. You don't use the number of shares. So let's add. We are done with our information. Let's add 7,380 plus 2 million. Sorry, plus 1,230,000. We have 8,610,000. So we put 8,610,000 on both sides. Then we subtract the repurchase minus 656,000. Then it gives us the closing balance, right? So that's your ordinary share capital. Now let's do retained earnings. Let's do retained earnings. So the retained earnings, I'm just gonna rub here the share capital, and then we do retained earnings, right? So this is the ledger account for retained income, right? Retained income or retained earnings, right? So you've got your credit, you've got your debit. Now, how much is the balance? Remember, always you start with the balance. So the financial year starts on 1 March 2021, and you've got your balance brought down. How much? There it is. It's 753,000, right? You've got your closing balance, and therefore it means you can write here 2022 February 28 balance CD. How much was it? The balance CD is 1,196,000, right? And then you will have your total here, and then you'll have a total here. Now the next item is net profit. So in 2022 February, when the year ends, you will have your net profit. So it means you have your net profit here. How much is the net profit? Net profit after tax. It's 1,022,000, right? And then on the you credit it because it increases the retained income. Then on the debit side, there's a dividends, right? You've got dividends. So you just combine your dividends. So okay, sorry, the date. So the date will be the year end 2022 because you are combining your dividends 28. So dividends, how much were the dividends? So you just write the total 443,000. Then still on the when was it? Oh, which means we should have started with 2021. When was it? 2021, when the repurchase happened, August 30, right? So the repurchase was how much? The repurchase was 136,000, right? We focus only on the part that was over and above the share price, which was previously known as the share premium, right? And then you add debit and credit, which side is bigger? So 753,000 plus 1,022,000. 1,022,000, you will have 1,775,000. So you put it on both sides. Remember, the closing balance becomes the opening balance on the next period. So which means our balance CD here will become, so 2022 March, right? 1. The balance, it will become our balance brought down. So it's how much? 1,196,000, right? So it's our balance brought down. Now, when you take this and you subtract all of this, it must give you the closing balance, the balance CD. Balance CD is basically the closing balance. So we say 1,775 minus 443,000 minus 136,000. Then it gives us 1,196,000, which becomes our opening balance. So this is the ledger account for retained earnings, right? Now, what I want you to know, I want you to take note of the similarities between and the relationship between the notes and the ledger accounts. On the ledger accounts, it means all the amounts that are positive will be the debits, and all the amounts that are negative will be the credit. Only on this one, because these are equity items, not on any ledger account, right? Only on this one, because we're dealing with equity. Equity increases on the credit side. When equity increases, it means you must credit. So that's why I say all the positive ones will be credited and all the negative ones will be debited. See here, we've credited the positive ones here, and then we have debited the negative ones here, right? Same applies here. We have credited the balance, we credited the issue, and then we debited the repurchase, right? Then the balancing figure is the closing balance. The closing balance is the balancing figure in a ledger account, right? Now we are done with the ledger accounts. So we are done with the notes, we are done with the ledger accounts. Now, please be careful when you deal with this information. Be careful. If they give you a ledger account, you must be able to take that information and populate it into a note. When they give you a note, you must be able to take that information and populate it into a ledger account. When they give you a pre-adjustment trial balance or a trial balance, you must be able to take that information and populate it anywhere here, either in the notes or in the ledger. And same applies when the information is given in this format. You must be able to take it to the balance sheet and the statement of to the balance sheet. You must be able to take it to the balance sheet. Or if they want to prepare the equity section, you must be able to take closing balances. You must be able to take them to the equity section, because your closing balances are the balances that we take to the balance sheet, right? So this is the end of the share capital and retained earnings, and this was June 2022, right? Grade 12, June 2022, which was written by the 2022 Matric rewriters. So please subscribe to this channel so that you can get more solutions and more explanations to the questions Please comment with any question that you want us to cover. Please make sure that to share with anyone, share with your classmates, share with your Facebook friends, share on your WhatsApp statuses, share in your groups, in your class groups and your study groups as well. Thank you so much for watching, and all the best.